met in Mumbai today to consider the proposals from LIC to buy controlling stake in the bank. So the bank board has decided to seek the government's decision for the proposed LIC acquisition. So how will the LIC investment change the shareholding structure at IDBI Bank, and what is the cost of this acquisition by LIC? Sonal Sachdev is here with all the answers. Sonal.
After LIC got the nod to buy IDBI Bank 51% stake, and it was made clear that the stake would be acquired through a preferential issue, we decided to work some numbers. At present, IDBI Bank's equity comprises of 418 crore shares. LIC at present holds 33 crore shares, which is roughly 7.98% or roughly 8% of the equity. To take its stake to 51%, 367 crore more shares will need to be issued, which will expand the equity of IDBI Bank to 785 crore shares, of which, post the preferential issue, LIC will own about 400 crore shares or 51%. If we use today's closing market price of 58.15 roughly, or 58 rupees for the IDBI Bank stock, the amount required to be invested by LIC will be about 21,300 crore. Now let's break this down further. So post this acquisition, the government stake will slip to 46%, and the public equity share will shrink to just about 3%, and which is why the government doesn't see an open offer as a big issue, because this is less than 1,500 crore when you need to see this in context of the overall outlay. Now let's drill this down further and look at it in terms of what it means for a perspective vis-a-vis LIC's financials. LIC's net worth at the end of FY17 was about 606 crore. Now, if you look at the IDBI Bank investment vis-a-vis LIC's net worth, it's 35.2 times. If you look at IDBI Bank's investment vis-a-vis LIC's surplus, it's 9.7 times. And if you were to look at this as a percentage of the net premiums earned by LIC during FY17, it works out to 7%. However, if you look at the entire policyholders' investments that LIC had on the books as at the end of FY17, this works out to less than 1% or 0.95%.